Hello and welcome to this Forex Preview here at XM.com. I'm Elian Deltas and joining me today is Marios Hatchikiriakos, investment analyst, and we're going to discuss about the Bank of England policy decision on Thursday and the outlook for the pound. So, Marios, markets are currently split about whether the Bank of England will cut rates this week. What do you think will happen?
It's a very close call. So the market probability for a rate cut this week is 55%. So the markets are really split on this. Now, here's the situation in England. Economic data are really weak. They are weak enough to definitely justify a rate cut by the Bank of England. So economic growth, for example, in November was running at 0.6%, which is the slowest since the European debt crisis, and it's a horrible number overall. But here's the argument. All of this weak data reflect the period before the election. So everyone was waiting to see, was there a rebound in sentiment and so on after the election? Now, the only data that we've gotten that reflect the post-election period were the PMIs for January, and those rebounded pretty significantly. So, in my opinion, the recovery in the PMIs was big enough to give the Bank of England some breathing room. So if we hadn't gotten those data, or if we saw a smaller rebound than the one that we got, I would be in the camp calling for a rate cut. But now, seeing that there was a real recovery in January, at least in sentiment, but there was some improvement, I think that the Bank of England can afford to be patient for now. I think they can afford to say something like, we won't cut rates today, we're monitoring the situation though, and if this weakness in the data persists, then we will probably be cutting rates in the coming months. I think that is the most likely outcome, but it's a very, very close call. Now, if I'm right and we see the Bank of England doesn't cut rates this time, the pound will probably jump higher on the decision.
And bearing this in mind, what is the outlook for the pound?
Well, I think it's really going to depend on the signals they send about what are we going to do after today. So let's say they don't cut rates, the pound jumps. But if there's a strong enough easing bias there, we might cut rates, we might very well cut rates in the coming months, then any upside reaction in the pound might fade over the coming hours even. On the other hand, if they are more optimistic than that and they say something like, we didn't cut rates today, and they place a lot of emphasis on the PMIs and so on, then we might see any upside reaction be sustained. But I would argue that the most likely message is we haven't cut today, but we may very well cut in the coming months, so any spike upwards in the pound may be short-lived. Now, in the opposite scenario, if they do cut rates, we're likely to see the pound plunge, and whether or not that plunge is sustained will also depend on the signals for future rate cuts. Is this a one and done rate cut, or could we follow this up with more rate cuts?
So thank you, Marios.
Thank you.
Thank you very much for watching here at XM.com.